I'm Beau Turner, CEO of Abundant Mines. We're a full-service mining company in Oregon, Pacific Northwest of the US, and I want to talk about the most common scams and pitfalls in the mining industry because I and members of my team have been victims of them and lost well over 7 figures combined. So we'd like to save you from the trouble, the expense, and the heartache of losing your hard-earned money when you don't have to and you can absolutely mine successfully. We think that Bitcoin mining is one of the greatest investment vehicles in the world. It's what we've all put our time, energy, and capital into, and we don't want to see people lose money when they don't have to, when this can be profitable, fun, educational, and life-changing when done well. The most common way that people get taken advantage of in the mining space is through a model like cloud mining. And cloud mining essentially is just the idea that you own the fruits of some machine somewhere in the world, but you don't own a physical machine. And the reason that this is the most common way that people get taken advantage of is because it's the easiest thing to obscure and abstract away. In many cases, it ends up being like the scams that say, send me 1 Bitcoin and I'll send you 2 back. That's kind of what cloud mining has become in most of the worst cases. And I do want to be clear, there are services that offer real legitimate cloud mining services, but as a business model, largely it is the most frequently taken advantage of. And it's the most vulnerable to being falsified because there is no serial number, there is no equipment, there is no physical data center. You're essentially trusting someone to deliver what they say they're going to deliver with no transparency of how that's going to happen. A lot of people go for cloud mining because on the surface it seems like a way easier way to mine. You don't have to deal with machines and equipment and all of these things that come with actually owning your miners and having them physically hosted in a facility. Cloud miners are usually making it very simple and easy on the surface. But what you lose in that is actually you lose some of the best benefits to mining, one of which is the tax benefits. If you don't own a piece of equipment, you can't depreciate it. So it's not an offset. It could be a passive income stream, but it comes with more of a tax liability than if you just own the machine yourself. So even if it goes well, the model isn't designed to benefit you in the greatest way. The person who owns those machines, usually the company you're working with, gets to recognize all that depreciation on their balance sheet. And that's part of how their business model works, is that they can make income in a very low tax way because they have fast depreciating equipment that they're essentially leasing out to you. Another way that people commonly get taken advantage of in the mining space is by going internationally to mine. And just like anything, there are legitimate opportunities overseas to mine. The trouble is, unless you live in that country, it's very challenging to quality control. It's very challenging to get accountability. The lure is, especially in less developed markets, there's an opportunity to get energy at a very low rate. And again, this can be totally legitimate. I mean, there are people who are successfully mining in places like Ethiopia or Paraguay where they have a bunch of excess hydropower that can be acquired very cheaply. The trouble is, there are legitimate operators and there are illegitimate operators and fly-by-night operators and even outright scams that piggyback on totally legitimate markets and essentially are just there to take your money. But even with the legitimate operators, the challenge here is that usually there's some trade-off to going into these markets, like geopolitical risk, the risk of a more dangerous environment. You know, you might be unfortunately mining close to a war zone in some cases. And the challenge with going after cheaper power just for the sake of getting cheaper power is that if some other critical risk in the design of the facility, the placement of the facility, the politics locally takes away your machines, then you have no way of making your investment back. So part of the reason that we locate in the US is for that reason. It's a much more stable place to mine. There's never been an outright seizure of mining equipment like we've seen in some countries. Ultimately, even if you have cheaper operating costs, if your investment doesn't live for several years, you're not going to break even. So it's kind of a moot point even if you get lower prices. So I'll just say, if you're going to mine internationally, you should either know the person personally who is doing the service for you. You should actually live in the country where you can oversee it. And you should actually do your own research of whether the energy source is legitimate and viable and what those contracts look like. Because I've seen people go into international markets expecting one thing and then having essentially the entire agreement for power sourcing change overnight. The Middle East is absolutely one of those places where there's legitimate opportunity and there's also a ton of scams. The Middle East is very rich in energy resources, especially oil and gas. And so there's a lot of opportunity to mine on, say, flare gas, or even just excess oil that they don't have anything to do with. And that lures people in. Depending on where you choose to set up in the Middle East, there are very stable environments and there are much more volatile environments in terms of just the political climate and what their stance on mining is. And there's actually a lot of operations in the Middle East that set up illegally and effectively say that they're using the energy for some other purpose and instead set it up for mining. And if that use is discovered, then those mining operations get shut down and seized, and you've lost your investment. One of the most common things that I see, even from legitimate companies, that can bite people if they don't understand how it works, is something called white labeling. So I don't like to name names of companies that do this, but essentially a company, even with good intentions, can set up a website, a marketing department, a sales team, a customer service team, but then not have any of the infrastructure themselves. So they're contracting out with a third-party data center provider that, again, may be totally legitimate, but is separate from their company. And the problem that this creates is that the company that you're working with may not actually control the facility where your miners are running, meaning that, yes, they'll take your calls and they will help you best they can, but ultimately they don't have the labor force, they don't have the infrastructure, they aren't the people who are actually managing that machine. That can lead to a massive degrading in the customer experience because they don't actually control the whole supply chain. They don't control the customer experience. That was one of the things that we wanted to solve for, was we didn't ever want our customers to be at the mercy of someone who we couldn't control. This is something that exists in many industries where someone specializes in just the marketing and the sales, and then they refer the business out to somebody else. And oftentimes when it's done well, you don't even notice. Like, it's a totally seamless experience. But when it goes wrong, that's when you wish that you had gotten somebody who actually owned their supply chain and had responsibility for it. Because when you've got multiple parties in the deal, the person who's operating it doesn't really care what the end customer's experience is. They just want to collect the check from the people who are referring their business. And that doesn't necessarily depend on you being happy. This brings us into something similar to white labeling, but kind of different, which is the broker model in mining. And similar to white labeling, where you're getting involved with someone who doesn't actually manage their operations, there's a lot of brokers in the Bitcoin mining space who essentially will put together a deal with all of the services that you're requesting, like procuring your miners, and finding a hosting facility and ongoing management and customer service. And when it's done well, this is how some great deals get done, because brokers exist in almost any industry in the world. And when brokers operate well, they put together really solid deals. The problem with going with the broker model is that the broker can put together a deal, but ultimately they don't have control over where your machines are coming from, the service on them. They don't have control over the hosting facilities. They're trying to find you a good deal, but ultimately they are just putting together pieces of a puzzle for you. They don't own the process altogether. And the problem with this, especially when it's done poorly, is that a broker in many cases gets paid upfront as soon as the deal closes, and then they're no longer involved, and you have to deal with the back end service with someone who you didn't initially start the relationship with. And ultimately, if something goes wrong and you have a broker, an equipment supplier, and a host, you now have three parties that in some way are supposed to be responsible for your experience. But if something goes wrong and it's unclear whose fault it was, there's no one who's truly accountable. So if you work with a company that has the entire supply chain, the entire process baked into their service model, and they control that whole thing, you know exactly who to go to when something goes wrong. And it's very simple. You have one point of contact and everything gets handled on the back end. But if you have one person here, one person here, and one person here, and they're all compensated differently, and they're not necessarily even compensated to solve your problem, then you've got a headache on your hands that you now have to manage. And if you're getting into this for passive income and making a profit without taking on another job, then every time you have to pick up the phone and try to solve a problem is time that you shouldn't have been spending. One of the most unfortunate things that I see happen over and over is people who are trying to get the cheapest equipment possible and get outright scammed on the internet. This has happened to multiple of our clients where they come through our process, they get pricing, and then they go and do comparison shopping and they find something way cheaper. And we try to tell them might not really exist. We've been there. Members of our team have bought equipment that didn't exist. It's an unfortunate reality, but it's true. If you find a deal that seems too good to be true, it probably is. On the back end, there may be no equipment at all, like you just bought air and it's a total scam. It may be a different model than is advertised. So you could buy one type of machine and then get shipped a totally other type of machine, which is unfortunate because if you're operating it yourself and you're less technical, you may not even notice until someone tells you. The unfortunate reality is that pure miner sales is one of the most scam-ridden parts of our industry. And it's because everybody is seeking the best deal on an expensive piece of equipment. But ultimately, when you're not working with somebody trustworthy, it can end up in a total loss. And thankfully, we've had clients who did not lose everything and they still got into mining with us and made everything back. But in the short term, it's very painful and emotionally damaging to get scammed in that way. And so one of the biggest mistakes I find is people trying to optimize for getting the very cheapest thing that they can and then paying for it on the back end because they didn't get something that was reputable. And the other thing is, even if you do get cheap equipment, you still have to find somewhere to host it. So when we're marking up our equipment, part of that markup is the fact that we're doing repairs on it, we're operating it, we're making sure that it's online and it's not working, that we're bearing the brunt of that risk. If it ever has repairs and goes down, that we're actually subbing in one of our machines. So it's not really just a markup on equipment. It's actually this whole experience that you get on the back end that if you're just buying something on eBay or Amazon, does not exist. Most hosts of high quality don't actually accept outside machines because things like this happen all the time where people think they're buying something and then they get something else and then it gets to the facility and it's not what the host was expecting, and then people are really upset and don't know where to turn to get that problem solved. The danger in the mining industry is exactly that, where there's plenty of opportunity to find cheap equipment that is cheap for a reason. And if you don't have a lot of experience, you haven't navigated this space before, it's very easy to get taken advantage of. It's happened to probably anybody who's been in the industry for longer than a couple of years. There's a common joke in the mining industry that every block of capacity is 90 days out, because if you build a site really well, very efficiently, you can go from bare piece of land to finished facility in 90 days. But what this means in practice is that a lot of people will sell capacity that is 90 days out before they've even closed on the property, before they've secured any of their equipment, before really any work has been done on the data center itself. And the trouble is, they will sell this capacity, they'll pre-sell it to customers who want to mine with them, and then 90 days comes and it goes, and then another 90 days, and then another 90 days. And when developments are either not managed well or there's unforeseen issues and barriers to getting the project online, the people who are suffering are the ones who prepaid for capacity, bought machines that aren't getting deployed. And this actually happened to me. It's happened to members of my team, where you purchase your machines, you have them sent somewhere, and then the timeline for them getting online keeps on extending and extending. When you talk about an investment that's measured in a term of months, like 36 months, if you're delayed by 6 months, that's a material impact to the entire investment. And depending on when you were trying to get mining, you might have missed the most profitable window and you're waiting another 3 or 4 years for another very profitable mining window to return. So delays are extremely costly. And even if these 90-day out sites aren't outright scams, you are essentially trusting that everything is going to go right in a large, complex property development. And I will tell you from experience developing a lot of properties and projects like this, that almost nothing goes according to plan, even when you've got all of your ducks in a row. There's just so many variables that I can't control, that frankly nobody control, and you're assembling hundreds, if not thousands of interconnected pieces to try and come together to provide a service. And it's part of why we only sell space to people that we've already built. We've all been through this experience of buying miners, wanting them deployed, and then getting deployed months later or never deployed at all because something happened with the facility or the deal. So we make it a point to only sell capacity that we've already developed. I hope this has been helpful and that my experience and my team's experience can help you avoid some of the worst ways that people get taken advantage of in this space, and that you can get into mining profitably. If you enjoyed this video, be sure to like and subscribe. You can find us at our website, abundantmines.com, and make sure to follow us at Abundant Mines on all the social platforms as well.